What's up, everybody? This is Sunko, the Korean bro. Today is 2023, January 25th. Let's read today's article, okay? Okay, could Roku stock hit $100 in 2023? One chart that will change your minds on Roku stock. The fastest growing tech company expects to add staff this year. Up 9% in 2023. Is it safe to invest in the asset right now? Okay. One Warren Buffett ETF that could turn $300 per month into $1 million. Investing $100,000 into stocks in 2023 could get you $1 million by 2033. Well, will Amazon be in 3 years? Kathy Wood goes bargain hunting 3 stocks she just bought. Four Doge-stock billionaire money managers can't stop buying. Apple cheap strategies, great news for shareholders, bad news for Skyworks, Broadcom, and Qualcomm. Will Snowflake be $1 trillion stock by 2030? Two top dividend stocks for protection against recession in 2023. Where will Medical Properties Trust be in 5 years? Well, will Rivian be in 3 years? Okay, let's see. One chart that will change your mind to Roku stock. Less than 40% of TV consumption takes place through streaming currently. Less than 40% of TV consumption takes place through streaming currently. Less than 40% of TV consumption takes place through streaming currently. Roku's usage continued to grow even as the business is struggling. As the business is struggling, Roku's usage continued to grow, okay? As a leading streaming distribution platform, Roku still has a huge long-term growth opportunity. Jeremy Bowman, okay. There's still a lot of growth left in streaming. If you sold Roku stock last year, you're not alone. Shares of the leading streaming platform tumbled 82% last year, and the sell-off in the stock was somewhat deserved. After a boom during the pandemic, the stock crashed as revenue growth slowed significantly through 2022, and profits turned to losses after the company stepped up investments in its growth. The chart below shows how revenue growth and profitability have weakened over the last 2 years as the stock price has fallen. How revenue growth and profitability have weakened. Okay. Even worse, Roku expects revenue growth in the fourth quarter to turn negative due to weakness in the broader digital ad network, as peers like Alphabet and Meta platforms have also reported dramatically decelerating revenue growth. And yet, despite the headwinds in the business, the interest in the streaming platform is stronger than you might think. The company just crossed 70 million active accounts on the platform earlier this month, adding 9.9 million new accounts in 2022. A year when subscriber growth was sluggish at major services like Netflix and Walt Disney Plus. Okay, I get it. So last 2 years, it's been very tough, and even Roku, their revenue growth and profitability have weakened over the last 2 years, and that means something, right? Uh, so and even this fourth quarter, um, their revenue growth will turn negative due to weakness in the broader digital ad network. Mm. Even peers like Alphabet Meta platforms have also reported decelerating revenue growth. So overall, the ad industry um, is struggling uh, with headwinds. Uh, But even in this hard time, they're doing pretty well because their users are growing. Mm. They have 70 million active accounts on the platform earlier this month, and it's even adding more people. But Netflix and Walt Disney, um, their subscriber growth is more sluggish. Okay, the 9.9 million accounts added was actually better than the company did in 2021. Viewing time on the platform was also up solidly with streaming hours for 2022 reaching 87.4 million. So, viewing time on the platform. So more people come. The more people come, the more people spend their time watching streaming platform. Viewing time on the platform also rose. Mm. An increase of 19% from the year before. Increase from 19%. Okay. As those numbers show, Roku is delivering steady growth, and even if the financial numbers seem to say otherwise, still massive. Okay. Based on the stocks plunge last year, investors seem to believe Roku's bad days are behind it. The growth story is mostly over. They seem to think, especially given the challenges streamers like Netflix are facing, and the company will struggle to turn a profit. At this point, the stock is down nearly two-thirds from where it was at the start of 2020 before the pandemic happened. Okay. Hmm. Now it's going through a pretty hard time, but there's a reason why Kathy Wood is buying more and more of this this um, more of a portion of this stock. However, if you're thinking of drawing the tower on Roku, take a look at this chart below from Netflix. Okay. Throwing in the tower on Roku, take a look at this chart below from Netflix. Okay. Shares are viewing Netflix, um, Brazil, Mexico, Pond, other streaming, linear, other. Okay. The chart above shows what percentage of TV consumption takes place through Netflix, other streaming, and linear. As you can see, even the US streaming still makes up less than 40% of total TV time, showing there is a significant opportunity for the streaming industry. The chart shows how Netflix still has a lot of room to gain market share, but seems even more bullish for Roku as a distribution platform. That's because Roku's model is driven partly by advertising, which is dependent on viewing time. As more viewing time shifts from linear TV to streaming, the company will certainly benefit. Even better streaming leaders like Disney and Netflix have just launched advertising tiers. Hmm. And demand for those should go up over time. Additionally, advertising video on demand consumption should also go up as platforms like Warner Bros., Disney's HBO Max have also recently launched ad tiers. Hmm. Why Roku stock is buy? Roku has proven its ability to grow streaming consumption even in a difficult environment. Even in difficult environment, more people are using their service. More people are using streaming consumption, right? And the remaining transition from linear TV to streaming will continue to drive its growth. So, what exactly is transition from linear TV to streaming? Um, let's see. Linear TV streaming to linear TV streaming to streaming. Linear TV streaming to linear TV. Okay, linear TV versus streaming. Traditional TV refers to television broadcasts that viewers watch at specific times and specific channels. Um, okay, there's a perfect term here. Linear TV is traditional TV and refers to television broadcasts that viewers watch it at specific times on specific channels. Shows that air but were DVRs and watched at a later time fall into this category as well. While linear TV still carries large video advertising market, the landscape is more fractures in recent times. CTV spend will likely outpace linear TV if trends continue. With nearly three-quarters of buyers shifting budget from linear TV to CTV in 2021, according to Lab. Okay, CTV here. CTV refers to devices connected to the internet to stream video content on televisions. Devices that connect to the internet stream video content televisions. These include smart TVs, but are not limited to just television sets. CTV also covers devices like gaming consoles, Amazon Fire Stick, and Roku. In addition to the growing audience numbers, buyers praise CTV for its combination of premium TV content with digital measurement and targeting. Okay, and putting it all together. What does it say? CTV, connected TV, in this case streaming, has become a true pillar in the industry. Increasing demand from advertisers for CTV and OTT offering has many publishers energized to enter the burgeoning CTV marketplace. With more households than ever choosing to cut the cord on traditional TV, this trend is poised to continue, with CTV advertising becoming among the fastest growing sectors in the entire landscape. But if you are thinking there are a great deal of confusing terms involved in the subject, you're right. Not only is there an alphabet soup of letters flying around, but they are sometimes used inaccurately or even interchangeably by professional sources. This can make it confusing to get a handle on what all these terms actually mean. So we're here with a little bit of guidance on what CTV, OTT, and linear TV mean. So I get it. So linear TV means that some programs are aired at specific time and viewers can watch it certain programs at that specific time, but regardless of airtime, viewers can log on to whatever the platform is. They can log on and choose what they want to watch, uh, and then watch it. Mm. Uh, Still at this point, linear TV has a lot of advertisement, but as the time goes by, more of advertisement will be mm, used by connected TV. Mm. Okay, connected TV is more like an internet and no cord. A linear TV cord and mm, like traditional TV. Oh, that's repeated one more time to grasp the exact meaning, okay? That viewers watch at specific times and specific channels shows that air but were DVRs and watch at a later time fall into category as well. Mm. Still carries largest video advertising market. The landscape is more fractious in recent times. Okay, so this still carries the largest video advertising market. Largest video advertising market, but it's now fractious. CTV will likely outpace linear TV if trends continue, with nearly three-quarters of our shifting budget from linear TV to CTV in 2021. So let's read here. The related CTV and OTT refer to different things and should not be confused with one another. CTV represents the device that streams video content. OTT refers to the content delivery method. Utilizes cable, satellite, antenna technologies to deliver linear TV streaming channels and on-demand content. Okay, so linear TV uses an antenna, utilizes cable, and antenna technologies, things that you can think of in terms of old technology, not no internet. Hmm. What does all of this look like functionally? Here's a simple example. Okay, if you watch Grey's Anatomy in its regular time slot in NBC on your known internet connected television set, that's linear TV. Hmm. This regular time slot on ABC, regular time on slot ABC on your non-internet connected television set is linear TV. If you go to Hulu's site, watch it on your mobile device or laptop that's streaming OTT content. Then if you use your Roku to stream Grey Anatomy, you're using a CTV device to stream OTT content. Hmm. There are many opportunities available to publishers in the CTV space. Hmm. As the CTV boom continues and advertisers shift a larger percentage of ad spend towards CTV spaces, publishers need to be sure in their knowledge of the ecosystem and its terminology so they can be confident when discussing the future. So it's quite obvious that more people are using streaming video. Uh, in the past, people used linear TV. Mm, right. Okay, anyway, let's get back to the article that I was reading. Okay. Roku has proven its ability to grow streaming consumption even in a difficult environment, and the remaining transition from linear TV to streaming will continue to drive its growth. Eventually, this disconnected between viewing time on the platform and the underlying business performance, as measured by revenue and profits, will disappear, and the correlation will return. Roku is set to report fourth quarter earnings, and analysts expect both a wide loss in the bottom line and a decline in revenue. Roku is set to report fourth quarter earnings, and analysts expect both a wide loss in the bottom line and a decline in revenue. Okay, here's the some of tips that are given by this YouTuber. This YouTube name is reviews.org, and top 10 free Roku apps in 2023. And he says why you should use the apps provided by Roku. Okay, let's watch it and then see what they offer. The Roku organized a bit. Roku organized the things a bit differently from competitor like the one he said. On demand, user generated. Okay. Okay, I get it. So for I only watched like a 450 4 minute and like 50 seconds, but I do get what Roku provides. By using Roku, you will run out of. You don't have to worry about mm, what programs you have to watch. I mean, there are like millions and millions and millions of programs out there, and mm, you will never run out of it. Anyway, that is about it with Roku. Mm. So, uh, they had hard time, right? Ad industry, overall, uh, all of the ad companies are struggling, especially in this recession with interest rates, inflation, and stuff like that. But mm, things will get better, and the user of Roku um, is still growing. That's big signal. So as the recent results show, it won't necessarily be a straight path, but Roku will get there over time. Okay. I spent too much time here. Okay, next one. This fast-growing tech company expects to add staff this year. Palantir generated solid 22% growth in its most recent quarterly results and upgraded its guidance for adjusted operating income. Its operations may be more resilient in downturn given it generates the bulk of revenue from government-related contracts. A lack of profitability, however, is still a significant risk that investors shouldn't ignore. Could Palantir stock be goodbye this year? Palantir. So what is Palantir? Layoffs in tech have been the big story over the past several months now. Companies that aggressively hired during the early stages of the pandemics are now cutting costs as demand slows down and as the economy heads into a possible recession this year. But there's one business that is a notable exception to the trend. Palantir Technologies, the data analytics specialist known for its counterterrorism software, isn't just avoiding layoffs. It's planning to add staff this year. Okay. Uh, Recently, uh, we have a lot of news about company laying off their staff, and because there's less demand for the service provided by tech companies, but then there's one company, and this is a different story, but since the Palantir technology provide counterterrorism, is it? Hmm. Yeah, counterterrorism software, and its demand is so strong that they are even hiring more staff this year. Okay. With that said, here's a closer look at why you might want to have Palantir stock on your radar despite the broad sell-off in tech over the past year. Okay. Palantir 2 add hundreds of jobs. Let's look at Palantir. Okay, let's look at this one and see what they really are. Okay. Hmm. Palantir and Sonatics. Palantir is data mining, paving the way for renewable energy production using Palantir Foundry to radically digitize processes, leveraging the Foundry on top ontology and meta constellation software science modeling complex scenarios and using. Okay, I get it. So, Palantir and Sonadix, uh, they came up with this software, and this software does is that um, wherever renewable source is used, this program can be used to integrate um, all of sources and into one platform. Uh, Pretty much like they integrate and make it much easy for people to maintain. Um, in this video, for example, there's solar panels on field, and it looks like sometimes whenever the solar panel has problem, people have to go to that exact solar panel and look at it. Uh, but then, if they're using the software provided by Palantir Sonadix, they don't have to get to this specific destination. They can just work on it remotely. Mm. So integrated platform is what this uh, integrated platform. Okay, here is Sonadix paving the way forward for renewable energy production. So in terms of using a renewable energy production, they could use a Palantir Foundry to radically digitize processes, so everything can be digitized with this system, leveraging the Foundry ontology and meta constellation software science, modeling complex scenarios, and using commercial satellite imagery to remotely monitor solar fields, optimize maintenance, and take actions in real time. So, take actions in real time. So, optimize maintenance, mm, remotely monitor solar fields. Okay. Let's look at second video clip and okay, here's after 7 years, tenure analyst uh company Palantir is making its public market debut. Best known for its sometimes controversial work with U.S. government agencies like the CIA. The DoD and ICE Palantir has increasingly been working with commercial customers as well, which investors hope will put it on a path to profitability. Okay. Okay, 50% commercial sectors, 53.6% government sector. So government sector and commercial sector, they both takes up much share uh in Palantir revenue. It has been growing. Okay. Okay. Let's look at the price of Palantir. Okay. Mm. Palantir, Palantir Technologies, 6.87. Hmm. So their revenue is growing, mm, but they've never earned profit yet. Mm. S- Not yet, right? But it's a kind of trajectory that every IT company goes through. Okay. That makes sense. Um, since they are working on both government and private sector, people raise eyebrows, right? Data mine empire. Okay. I get it. So by using the program provided by Palantir, they could spot the location of Bin Laden, and it's been also used for mm, terrorist attack in the um, on site, like real battle. Mm. Okay, I get it. So like by using the program, they could actually extract a lot of data and then put all of data uh, into one and then make it as really meaningful. Uh, and then that meaningful data can be used as something that gives clue to the problems they're about to solve. Okay. Well, their program is not only being used by military forces, uh, but I guess that they also work with like high profile customers like JP Morgan. Reportedly hacked OSHA security chip packed by Pounder after executive found he was spying on them. Okay, so they're using software to uh, find suspicious behavior or like to try to find something meaningful data, right? It's also used as a tool for finding the fault parts of device. Mm. Okay, by using the program, they provide their production. Uh, well, it's like 10% like went up. Mm. managers stop smoking salespeople, and starts hiring them. They also raised controversy because their software was also used for crackdown on illegal immigration, I guess. Hmm. Data mining, prioritized size under attack by employees. Okay, I'm looking at too much of Palantir right now. It's not something that I had planned, but we'll watch the rest of this clip later on as I talk about the Palantir next time. We still have like five articles, so I'm just gonna read the rest of them first, and then watch Palantir video clip next time. Okay. What else do we have? Up 9% in 2023. Is it safe to invest in also right now? A bigger round what makes NOS different? Safety. No. Okay, let's get to the bottom here. Investors on NASDAQ have a choice. They can either invest in the index through an ETF or pick individual stocks. An ETF helps make investing easy by giving investors exposure to dozens of companies with just a single investment. However, if you are particularly confident in a few Nasdaq stocks, you're probably better off investing in those rather than an ETF. Hmm. No one can time the market. It's impossible to predict how the Nasdaq will perform this year. But the risk reward trade off in investing in the tech heavy index looks favorable now. Many top tech stocks have fallen substantially and traded discounted valuations. Alphabet, for example, is trading at a discount to the S&P 500. Its Meta Platforms and Apple is only slightly more expensive than the S&P 500. Hmm. Blah blah blah. Okay. Oh. Shopify. Hmm. Raven. Radfin. Okay, hold on. Tesla. Teladoc Health. Let's see. Let's first read about Redfin, okay? Visa, Chevron, Salesforce, Verizon Communications. Redfin, what is Redfin? Real estate disruption is dead. Far from it. Even after recent rebound, Redfin is down by well over 90% from its highs, and it's not hard to see why. Wow. Okay. And it's not hard to see why. The real estate market has slowed down dramatically. Over the past year, Redfin's business has been losing money at an alarming pace. And due to some ill-timed acquisitions, Redfin's debt has ballooned to nearly 3 times the company's market cap. However, the company is making the right moves in a tough situation, such as large rounds of layoffs, shutting down the money-losing Redfin Now iBuying business, and focusing on its core business. CEO Glenn Common believes the company can be profitable as soon as next year. Okay, so this author says that it's still worth investing into Redfin because although they've been not doing really well in the past year, they're making some right decisions. For example, they're having some round of layoffs, shutting down the money losing business and focusing on its core business. After all, there's still a lot of room for disruption in real estate. Most brokers still use the antiquated 6% selling commission model, and Redfin is the only major player that wants to compete on pricing. If the real estate market normalizes and the company builds its market share in its brokerage, mortgage, and other service business, it could produce 10 backup returns by 2033. Uh, in order for me to invest, I gotta understand what they provide. So I just want to pass. Okay, look for next opportunity. Okay. Anyway, so this is it for today. It's already 11:51, and I'm have to come back tomorrow. Okay. Bye bye.